Hi, this is Scott Murray. Welcome to the Daily Economic Market Shout for Wednesday, June 7th, 2023. It's great being with you here today. And today we had trade news. I think it's important this time because we did see the deficit climb. Climbed rather sizably up to roughly $75 billion. Had been sitting around 60 billion. Yeah, there was a revision downward from the previous month. But what we're seeing is exports struggling. And that tells us the global economy is still struggling to get on back on its feet. We've seen weak numbers out of China. Of course, we know the European story with the higher interest rates and the struggle they're having on their manufacturing side of the equation, even though the service element is looking good. Excuse me. Um, so that's going to be a holdback for GDP. This is the first reading. This is the April reading for the second quarter. That tells us that, yeah, we're kind of hanging in there with growth, but mostly over the last year, we've seen trade actually being helpful, right? We saw some issues with the supply chain. That supply chain struggled to get back, kind of boosted, uh, should I say, or lowered the deficit. And then exports were doing okay as there was the stimulus, particularly throughout Europe. That stimulus has come off. The impact of energy, the impact of higher interest rates have still kept the countries, particularly in Europe, a major market for the US, in a weak situation. So we want to recognize that these types of import numbers, export numbers, I should say, really do indicate that the supply chain is better. So imports are up, particularly of autos, and that really helped. But the shipping of industrial supplies being low is going to overhang. That's a manufacturing item, particularly where other countries demand a pretty high value for the United States is industrial supplies. So those elements show the struggles there. On the service side, we did get a little bit of pickup in the surplus. The US has a service surplus, and it was running around 20 billion, now moving back up to near 22 billion. And that's an encouraging sign. We're seeing demand for US services, especially on exports. Now, earlier this week, we got the ISM new orders number on the service side, and that was still growing, but at a weaker rate. So the fact that service companies here in the United States are getting more demand internationally is actually a helpful to the general slowdown that we have been seeing. And so, again, we want to recognize that most of the stuff that is occurring or the daily numbers we're getting are weaker. We got another one today in terms of mortgage activity. Mortgage activity fell. This is the second worst number since 1995. Interest rates are moving back up. They've moved up to roughly a 6.8% now. They're not over the 7% we saw late last year, but they really are taking a bite out of purchase interest. At the same time, we are seeing very low inventory, and that's really a struggle. So new homeowners or people looking to move are really struggling to find anything available. That typically leads to a bidding war, and they still have upside and a constraint on the monthly payments because of affordability. So we need housing to get moving. Housing needs to have construction activity that goes into CapEx, but importantly, we have a lot of people who need housing, and those types of misbalances are never good over the long term, and they really struggle to correct. And therefore, we have to be very cautious as we move forward. Yes, you could say the pending recession could be a catalyst for home building. But what I would suggest is even though you might get the construction side of the equation, new homeowners, if homeowners are not going to want to list their houses if they think they're getting a poor price for it, they're just going to hunker down. And that's going to continue that imbalance, even though we see a weak economy. What we need is positive movement, interest rates to kind of back off a little bit, helping affordability, and then the the desire to update or desire to relocate to kind of push things as we move forward. Still a problem, but if we look at the housing numbers, the mortgage numbers this morning, and we look at trade, we don't see a very pretty picture for the future. This is Scott Murray for the Daily Economic Market Shout. Thanks for joining me.